Hi guys, welcome to this Money Control live stream. Good morning. I am Nandita Khemka from the Mumbai studios. Of course, lots to digest this morning. We've had the first Fed rate cut for 2025, a 25 basis point rate cut as was widely being expected. Two more rate cuts signaled by the Fed for this year, and in a surprising move, just one rate cut for next year. That's what the dot plot indicates. But of course, we'll be getting a big market voice, a global voice, to decode the Fed's tone and of course how things are really looking like going forward. But the GIFT Nifty also hinting at a positive start for our markets. We have been, we've turned outperformers this month, so that's a good news when it comes to the Indian markets because if you look at the year-to-date market movement, we have largely underperformed the emerging market basket as well as US markets. But yes, lots to watch out for in the show. Before we move ahead, quickly take a look at the top headlines at this hour. First, this year, the US Federal Reserve cuts interest rates by 25 basis points. Fed Chair Powell has signaled for two more rate cuts before year end as concerns over US labour market loom. Stocks on Wall Street ended mixed after Fed delivers a widely expected rate cut. Dow adds 250 points while the Nasdaq inches lower. Dollar slips while 10-year Treasury yield rises. Asian markets open mixed, mirroring Wall Street moves on the back of the US Federal Reserve's interest rate decision. The GIFT Nifty, however, is indicating a firm start for our markets. Let's see whether we can, make a dash at that 25,500 level today itself. Crude prices ease after the Federal Reserve cuts interest rates. Meanwhile, gold hits an all-time peak as the Fed resumes its easing cycle. Well, as promised, let's get you a big global voice then to decode the Fed's moves and what the dot plot is really hinting at. Joining me is Mark Matthews, Head of Research at Asia at Julius Baer. Mark, lovely to have you on the show this morning. Thanks a lot for taking out time. 25 basis point rate cut that was being widely expected. The dot plot has indicated two more rate cuts for this year, totaling 50 basis points. As per expectations, or were you expecting lesser or more than this for this year itself?
That's what we were expecting. We're also expecting another two interest rate cuts next year by the end of March. And so I was eavesdropping on you earlier. It's true that the dot plot is only looking for one next year, but without meaning to be critical, the dot plot has frequently not proven to be what actually happens. As you know, it's an average of what the 19 officials who are asked to contribute their forecasts to economic projections contribute 4 times a year. But who knows what they'll be thinking in a couple of months. Well, I wouldn't worry too much about that.
Okay, we're talking about the, messaging from Powell. Markets were fairly perplexed with the governor's tone, right? What is your read through? Because he called this as a risk management cut. He noted that inflation would edge up due to Trump's tariffs. But labor market has cooled off and there's significant concerns when it comes to labor markets and they have overridden concerns on inflation. Do you think here on the Fed will have to get comfortable with higher inflation and, the 2% goal would have to be, pushed higher?
In fact, just the day before Jerome Powell gave his speech at Jackson Hole a few weeks ago, the Fed released a statement where they said the 2% target is not the same hard target as before, and they're more flexible. And if you look at the dot plot, it also forecasts where they think inflation will be, and they don't see it getting to 2% until 2028, which is a long time from now. So I guess they're not coming out and saying it explicitly, but yes, it is clear that the 2% is not a hard and fast rule the way it was a few months ago, nor should it be. I mean, that 2% was a number they came up with in 2011, and the world has changed a lot since then.
Got your point. So, what's your sense on how EM flows, emerging market flows, will shape up here on? Will the tide turn for India anytime soon? Because we know that China, Japan, Taiwan, these are some of the nations that have seen the bulk of FI allocations. But India, on the other hand, has seen outflows to the tune of over $15 billion. We've also had quite a few reforms back home here in India, right? GST reforms. A lot of fiscal measures have also been announced this year by the government. We've had S&P upgrade as well, and our growth figures have been pretty good for the last quarter. Do you think the tide would turn for FIIs and they will return to India anytime soon, given the fact that the rate cut cycle may have started in the US again?
I think so. I think the reason why they were selling India was because the growth last year, both the economic growth and the earnings growth, disappointed. And the most recent quarterly earnings growth was, correct me if I'm wrong, I think it was around 7%. So that's materially below the S&P's earnings growth for the most recent quarter, which was around 13%. But going forward, I do believe with all of these fiscal and monetary changes, and in my opinion, the likelihood of a resolution to the disagreements between the United States and India, we will see earnings growth pick up. And I'm sorry, the 7% I'm thinking of, you can correct me if I'm wrong, but the 7% is, I believe, what the consensus is forecasting for this calendar year. And so I believe that'll be exceeded.
7.8% was for the quarter gone by. You're right. 6.9%. That has that's the Fitch's latest upgrade for India.
Okay, so I don't see why that cannot be
right, Mark,
beat
how are you
in light of all the cuts.
Sure. Please go ahead. I'll come to you after your answer.
Well, the RBI's cut 5 times this year. You've had a consumption tax cut, income tax cuts, and the combination of all those things, reserve requirement ratio cuts for banks, I believe will show better earnings growth. So I think we can handily beat that forecast, and then next year get into double digits again. And I suppose the only thing that may keep people less interested in India is the fact that China's come back on the radar screen in such a big way now for global investors. And they haven't looked at it for, I would say, over 5 years, but they're rapidly liking it. Not a story comparable to India at all, but powered by the same kind of thing that's moving the US stock market, artificial intelligence. And those stories, of course, are in very high demand, anything related to AI. So yesterday you had 2 very large Chinese companies, Baidu and Alibaba, whose share prices both went up a lot. And I think Baidu's up again today, because they are making great strides in artificial intelligence. So India, of course, has good stories, but we must confess there isn't a big AI angle to any Indian stocks.
Sure, point taken, Mark. But how are you positioned on India? Which are the sectors that you're liking here? We've seen a resurgence in the stock markets, at least month to date. We managed to outperform some markets. As interest starts coming back and we start, resuming our upward journey, any sectors that have caught your attention here in India?
I can't really say there's anything new. We like banks, we like consumers, we like infrastructure. We liked them at the beginning of the year, but I do believe that there is increasing reason to look at the IT sector because it's underperformed so much. It's underperformed banks by about 30% so far this year. And historically, those 2 sectors move in opposites. So I don't know when the IT sector will start outperforming, maybe if there's some resolution to the disagreement with the United States. But that sector, from a kind of contrarian perspective, certainly stands out.
Sure, of course, there are signs of thaw emerging now between between India and the United States. So, we are of course keeping an eye out for all the developments. But last question, really, the dollar index has dropped significantly, right? Over 11% in 2025 year to date. How are you looking at the dollar index? Do you expect more weakness going forward, or do you think the bulk of the correction is out of the way now?
2/3 of the dollar index is the euro, and the Americans are definitely going to be cutting more than the Europeans going forward, but the Europeans are not without their problems, and we see that reflected in their rising government bond yields. There are big problems in Europe. And so I think versus euro, dollar might not go down a lot more, but I do think emerging market currencies, which by the way are 50% lower than they were 15 years ago, 50, I mean, it's a huge number, are now starting to break above the downward trend channel they've been in for umpteen years. And I think that emerging market currencies in aggregate will outperform the dollar over the next year.
All right, emerging market currencies will outperform the dollar next year. But with that, Mark, we are out of time. We'd like to thank you for taking our time and sharing your perspective with us. Always a pleasure. And I look forward to getting you back on the show, pretty soon.
Thank you.
Thanks a lot. Well, that was Mark Matthews of Julius Baer. His views on India, on the Fed's rate cut path, as well as emerging market currencies. But let's shift focus to our markets. Then the GIFT Nifty was hinting at a gap up of 80 points or thereabouts. We are of course perched at over 3-month highs. We managed to shut shop above that 25,300 mark, 25,360. That was the intraday swing high yesterday. Hoping to get past that today. We'll have to see whether a short covering rally really takes shape and whether we can make a dash at that 25,500 mark today itself or not. If you look at some of the other sectors, the good part is that the Nifty Bank Index has started firing up, although it has gained for 11 straight days, but it has started to pick up momentum in a big way only recently. It has been a slow and steady rise for the Nifty Bank Index, but we have cleared that 55,500 mark in intraday trade yesterday. 55,600, that will be the crucial level to watch out for on the Nifty Bank Index as well. Defense PSU names have also been doing fairly well, renewed buying interest in railways, defense, etc. We've seen the PSU index also gaining over 1% yesterday. In terms of put call ratio, it fell to 1.21 vis-a-vis 1.29 in the previous session. And if you look at some of the stocks that have been banned today, Angel One, OFSS, that's Oracle Finance, and RBL Bank, these will continue to be in the F&O ban, but one stock that has come out of the ban is HFCL. FIIs once again turned net sellers yesterday. 1124 crore rupee worth of equities sold in the cash market. DI buying support continues. 2,200 or 2,300 crore worth of equities bought in the cash market. But let's get on board our expert for today. Then joining me is Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research at Motilal Oswal. Chandan, lovely chatting with you as always. Good going for the market. We took a break on Monday, but ever since then we've seen good traction and we've cleared that 25,300 mark. What is your sense, given the fact that the Fed has cut interest rates, although it was fairly baked in? Do you think we could make a dash at the 25,500 mark today?
Good morning. Thanks for having me, Nandita. And it's great to hear market stalwart on money control, and it's great to hear comment from the Julius Baer and Marks. So I think the global event is over. Fed finally came out with 0.25% rate cut, and that is going to boost the sentiment as a whole across the equity markets. The good part is Nifty already started to form higher top, higher bottom. We witnessed decent recovery in last 3 weeks. Market formed the bottom near 24,400, and now we are near 25,350. So almost rallied by around 900 to 950 points, which clearly indicates that now the bullish sentiment or bullish undertone is visible in the market. 2 days back, index took hurdle at 25,150, which earlier used to act as the same key supply zone. But the way it surpassed the same and moving upwards, we believe momentum could continue. So I believe 25,150 could act as a major support, and it might be a role reversal setup because previous resistance may now act as a major support to drive the next leg of rally. And with this price setup, we are expecting Nifty to extend the rally towards 25,500 to 25,750. If I talk about the data internal, India VIX is cooling down now at 10.25, comparatively at recent lowest level of last multiple months, multiple years. Put call ratio is at 1.21. FI's long short ratio improved to 13.5. So all these data setup indicate that FIs are now covering their positions. They are buying call, they are selling put. So with this view, I believe this momentum could extend towards 25,500 to 25,750 in Nifty index.
Okay, 500, 750, that could be the range going forward. But let's talk about one engine of the market that has started firing. The Nifty Bank Index, 11th straight day of gains and 55,500. We cleared that level yesterday. Once 55,600 is cleared, which is the next important level that you'll be watching out for in the Nifty Bank Index? And which are the stocks that excite you within the banking universe?
Yeah, so quite interesting theme, I believe, at the current juncture when everyone is talking about the interest rate cut, whether be it US or be it Indian markets. And I think it's time for cut. US is talking about FOMC meet and rate cut. Even we are looking for GST rate cut. Even everyone is waiting for tariffs cut from US President Trump. And now the next theme will be cut from short covering by FIs and then RBI rate cut at Indian market as well. So I believe that cut or short covering could trigger the Bank Nifty. As of now, the Bank Nifty is lifetime high at around 57,000 something zone. So roughly around, I can say the lifetime high zone is 57,628 and immediate hurdle is at 55,555. Yesterday, it managed to cloak that hurdle and formed a strong bullish candle. It surpasses 50-day exponential moving average, recovered well in last 3 weeks, holding well above key moving averages. So I believe momentum could continue till it holds above 55,250. This time Bank Nifty has potential to bounce towards 56,000. And I think above 56,000, there will be the chances for the new lifetime high territory. Now talking about PSU versus private bank, I'll focus more on the PSU. In fact, positive on the CPSE theme. So in CPSE, we can talk about the PSU banks, railway, defense, selective power and energy name. So SBI is our preferred pick in PSU name. Given a strong breakout after the consolidation of almost 100 trading days, it managed to surpass and given a momentum above key hurdle of 840. So I believe till it holds above 840, State Bank of India can head towards 888 to 912 level, which is the lifetime high for the counter. Apart from SBI, I believe Can Bank could be in focus. Consolidation breakout is clearly visible on the daily chart. With the support of 113, it can head towards 121 kind of level. In fact, on the weekly chart, we are observing a price pattern similar to bullish pole and flick, which indicate the bullish sentiment from current zone. So I believe PSU banks will do well, especially SBI, Can Bank and other. In private bank, I'll focus on Axis Bank. With support of 1100, it can head towards 1160 kind of level.
All right, those are the names to keep on your radar. But, just seconds to go for the markets to open. Any other picks from you for viewers, Chandan?
So yes, we discussed a lot. We have given the picks on PSU banks. In fact, State Bank of India is going to my preferred pick. Apart from that, I believe selective new age business companies could be in focus. So we can look at the companies like Eternal. One auto theme can be played here. So look at the counter like Hyundai. Hyundai has given a consolidation breakout. In fact, a triangle breakout on the daily chart. Major trend is positive. On weekly chart, the stock has been making a hard top, side bottom. So I'll focus on that stock for 3 to 5% kind of rally. Fresh leg of breakout cannot be ruled out in that stock.
All right, those are the recommendations. Eternal, Hyundai, a lot of them, and of course SBI from the banking lot. But let's take a look at the markets then. Good start, almost 100-point uptick on the Nifty. It's at 25,420 or thereabouts. So yes, we've cleared that 25,400 mark on the upside. Sensex up over 350 points, 83,000 back on the charts for the Sensex as well. Mid-cap index, has opened up higher, but it's the benchmarks that are taking the lead at the current juncture. 0.2% kind of a gain on the Nifty mid-cap index, and the Nifty bank index has cleared that 55,600 mark on the upside. In fact, it's above that 55,700 mark as well as we speak. Breadth yesterday as well, it cooled off a bit, but we did see the breadth ending in the positive zone yesterday. Today as well, extremely strong the market breadth as of now, but we'll have to wait for things to settle down a bit. to really call it a trend. It's 3.6. In fact, almost 4:1. That's the NSE advance decline ratio. 1700 advances to almost 460 declines. In terms of other sectors, I want to see what the IT pack is really doing, because IT and metals, they will be in focus. Globally sensitive sectors, and of course we know that the Fed has cut interest rates by 25 basis points. So yes, there will be a fair bit of reaction on these sectors as well. Just want to see what they are doing at the current juncture. The IT pack in particular. Yesterday also IT was upbeat. Today IT is up 1.3%, taking the lead as we speak. Metals, very flat at the current juncture, trading with a negative bias. Metals have had a good run over the last couple of months. At a time when the index was in the red, metals managed to outperform quite well. But in a couple of days, metal has been taking a bit of a breather, and today happens to be one of those days as well. But IT leading from the front, 1.5% gain on the Nifty IT pack. Autos in the green. FMCG, that has also come under some bit of selling pressure of late, but it's trading in the green as of now. Pharma up somewhere around 0.2%. PSU Bank Index cooling off slightly. Of course, PSUs have seen a very good run in recent times. Some bit of cool off there on the Nifty PSU Bank Index. Realty also trading in the green. So yes, all in all, it's a fairly strong start. Gains, of course, being led by the IT names. In terms of the individual movers, it's Infosys. 1.6% gain. Wipro, HCL Tech, top 4 movers on the Nifty are from the IT basket. Infosys, Wipro, HCL Tech, Tech Mahindra. Aside of that, you have Sun Pharma. Some of these pharma names have been under pressure of late, but today Sun Pharma is having a good day. 1% gain on Sun Pharma. HDFC Bank is also up 0.7%. ITC, I think that was a laggard yesterday. Today it's up 0.5%. Life insurers like HDFC Life are also back in favor. Yesterday, both SBI Life and HDFC Life were under pressure, and so was Titan. But Titan is seeing good interest right now, 0.5% up. Trent is also in the green. So is Tata Steel, Tata Motors, Eicher Motors, Maruti, Hero. All of these auto names also doing well. What's not doing well are some names like Hindalco among the top Nifty laggards. Bajaj Finance as well, that's down 1%. Ultratech Cement, SBI Life although is trading in the red, although HDFC Life is in the green. Coal India, Dr. Reddy's, Nestle, SBI and Bharat Electronics. These are some of the counters that are trading in the red, and so is M&M. Talk about some of these metal names. Some bit of a breather coming in last couple of days. Would you look at it as a buy on dip trade, and any particular stocks that stand out within this space?
Yeah, so I think we need to keep on selective name, and I believe selective stocks could be in focus. I think you discuss about selective pharma name, right?
Yes, that's correct.
Yeah, so
Pharma
I think
was earlier. I'm talking about metals right now.
Yeah, so like talking
Metals.
about Nifty, talking about Nifty metal, we witnessed a consolidating move yesterday, but major trend is positive, and I believe this interest rate cut scenario could give some bullish stance onto the metal as well. But however, we have seen consolidating move in last couple of days. Nifty metal has seen some sort of consolidation, but selective counter can do well. So if I look at the Hindalco on weekly chart, it has been forming a bearish candle, but may retest the support to start the next leg of rally. So buy on decline can be applied near 720. So with the support of 720, look for an upside trigger towards 760 kind of level. If I look at the Tata Steel, it has been consolidating, holding the gains. Those who are keeping the position can keep the support at 168 for 175 kind of level. And if you look at the pharma name, I believe we need to look at selective counter. However, Lupin has got stuck in a range. Biocon is also witnessing some sort of pressure at higher levels. So have to be very selective. And I think in this scenario, when now next trigger will be the GST rate slash, will focus on the consumption, auto, then CPSC, PSU kind of name in this market scenario. Yes, banking cannot be ruled out to see the momentum post the Fed rate cut.
What about IT? In good stead today, and IT has been witnessing on and off buying interest. Yesterday as well, IT was pretty strong. Would you look at some of these mid-cap names, or would you look at the frontline names like TCS, Infosys?
So like Nifty IT has given a consolidation breakout on the daily chart from its double bottom kind of pattern. And after that, it witnessed recovery yesterday. Today, it open gap up. and rallied by more than 1%. So I'll focus on mid cap because I believe mid cap will deliver better return than the heavyweights counter in IT sector. And that is the scenario from last couple of quarters. So I can focus on the name like Emphasis, which has given a consolidation breakout on the daily and the weekly chart. In fact, I see a formation of cup and handle pattern on the weekly chart as well. So with the support of 2960, Emphasis can head towards 3150 kind of level. Coforge is also other name which is also given a neckline breakout about 1790 marks. So with the support of 1790, it can head towards 1900 kind of level. So Coforge and Emphasis could be two name. And apart from that, I believe stock like KPIT Tech has given a breakout. In fact, the rounding formation is visible. It has given a decisive hold about 1300 marks. So with the support of 1292, it can head towards 1380 kind of level. So yes, selective IT stocks are in move, and I believe recovery in the Nasdaq could give the positive sentiment in the Nifty IT index as well.
All right, preference is mid cap. That's the view on IT. But let's talk about some of the stocks that are in focus today. Cohance Life, that stock is down 5%. Jasmeral Holdings may have sold stake in the company. In fact, they have upsized their block deal size to $350 million. Of course, they were looking to sell 5.1% stake, but that has been upsized to 8.9% stake according to sources. And I think the block deal has already happened. Some 8.9% equity worth 3,000 crores changed hands. The stock is under pressure today, of course, because of heightened supply. In the last month as well, it has seen somewhere around 2% kind of gains, but today's move has taken the last 5-day move to down 7% or so. What would you do with this stock? It's at 917 or so. Is there a trade here on Cohance?
Yeah, so I think better to avoid because if you look at the price behavior, it's negative. In fact, on the monthly chart, it has been making lower top, lower bottom. The stock is down by around 20% in this year. Recently, it witnessed a bounce towards 1038, but that bounce was sold. In fact, we are witnessing the volume at the time of decline. It might be the block deal and bulk deal, but as of now, setup is not clear. I don't know what is the reason behind the huge volume in the counter. But yes, as of now, support can be at 860, and if it moves about 1000 marks or 980 marks, then only we'll get the sign of trend reversal as of now.
Okay, that's about Cohance. It's largely an avoid, but let's shift focus to our viewer queries then. I just want to start with some of the queries that we couldn't take up yesterday. There was a query from Komal Makecha, wants to know your thoughts on a DLF and BEL, Bharat Electronics, for the next 6 months and 1 year. Also, I spotted a query on defense names from Kartikeya Singh. He has a query on BEL and HAL after the recent rally. What are the next targets one should look at to book profits? Your thoughts on HAL, BEL, and DLF was the other one that this person had a query on. How should they navigate?
Yeah, so Komal and Kartikeya, so you ask about the important theme which is really going well. So first to reply on BL. In fact, BL has bottomed out last week with the support at 370 and now holding well above 400 marks, quoting at 412 levels. So till it holds above 400, it can head towards 430. But yes, these are the volatile names. So if you are looking for positional point of view, use the key support at 390 for 440 kind of level. HL is also one of the strongest name in defense name. Recently, it gave the double bottom breakout of 4620 and after that rallied by 250 points plus. So major trend is positive till it holds above 4700. It can head towards 5050, 5100 kind of level. So positive stance in most of the defense name, and I believe counter like BL, HL, BDL, Mazgaon Do, Paras could be on focus, and these stocks are likely to inch up. Now on reply on DLF, Komal asked about that. I believe real estate counter will be slightly slow because now the entire focus will be on RBI rate cut or RBI MPC meet. I think that could give the trigger. However, the good part is most of these stocks have bottomed out. The selling pressure is not visible. And if someone is looking at the price pattern, I see a rough head and shoulder or inverse head and shoulder kind of pattern with surpassing over 50-day exponential moving average. But momentum is missing. So we need to look at the range bound kind of setup. As of now, support is at 770. Upside could be 820 kind of level.
Okay, that's the view. I hope that answers your queries, guys. The next stock, in fact, the next theme that someone has sent a query on is ethanol stocks. Mukul Vaidya wants to know your thoughts on all these stocks like Balrampur Chini, EID Parry, Sri Renuka, Bajaj Hindustan. How should one really look at these stocks? Because they are fairly volatile, so to say, and reactive to news. But we've seen good traction in some of these sugar names. Uh, After the recent announcements by the government, is this a positional play, or do you think one should only look at it from a trading perspective? And how should one look at some of these stocks?
So Mukul just started the question with ethanol, and I think Praz is an important name when we talk about the ethanol, but the stock is in pressure. It has given a breakdown. In fact, 444 used to be a key support that has broken, and now the stock is even trading at multiple months lower level, down by more than 50% in this year. In fact, other sugar name, whether we talk about the Renuka or Bajaj Hind or Triveni, most of the stocks got stuck in a range, and these stocks usually move by the news and then remains in coma for most part of the years. So I think it's tough to trade these names. Better to go for only swing trading. I don't suggest buy and hold them if you're looking for quick or looking for consistent move in such name, because these are having the cyclical kind of behavior. They move sudden and then suddenly just remain in range, or the momentum gets fizzle out at higher zone.
That's true. We've seen that with some of these stocks, time and again in news-based moves, but later on they slip into a coma. So post that, let's take a query on Anant Raj Industries. This stock has been in focus. The stock recently saw a very big up move, right? Kind of seem to have lost that query. But how should one look at this particular stock? What are the levels one should look at if they are holding it to book profits?
Yeah, so just to start, comment on Anant Raj. Really, the stock led by 10% in this week. The major move happened from 535 to 600, and after that, it has been consolidating. So I believe positive setup is clearly visible. In fact, rounding cup and handle kind of formation is visible. So till it holds above 570, one can hold the long position for 625, 630 level. And Nivedita, I just want to discuss about one more theme in this market scenario for viewer benefits. That is the EV. So I believe one can focus on the name like Olectra and
Sure.
JBM and JBM Auto. So Olectra has given a consolidation breakout, a big rounding formation on the weekly chart. So I believe with support of 1640, Olectra can head towards 1750, 1800. JBM Auto is also witnessing a positive price action. The major momentum happened on 12th of September, on the same day when Anantraz rallied well. And after that, it has been consolidating. So I believe with higher base of 725, this counter can head towards 785 to 800 kind of level. So I think this theme is on radar. And I think when we talk about the festive mood and auto and GST boost, I think EV plays an important role. And I think that's why the market is rewarding and these stocks are in momentum.
All right, keep the EV theme also on your radar and the stocks Electra and JBM Auto that Chandan just mentioned. But let's take a couple of, okay, this query by the way was from Amardeep Singh on Anant Raj. Hope that answers your query. The next query, I want to take up a couple of queries on the consumer durable space. Particularly AC and other white goods. Satya CK wants to know your outlook on Voltas for the next 3 to 6 months. And Satvika Ranganathan has a query on Whirlpool and she wants to know your target for 1 year. She's bought the stock because we know that discretionary consumer durables, etc., will be a big beneficiary of the GST cuts that have been announced, especially since names like Voltas have had a very rough run because of early monsoons and higher than expected monsoon rains. So your thoughts on these particular counters for the next 6 months to 1 year?
Yes, so first to reply for Satya, like Voltas is a good counter, but got stuck in a range from last almost 8 months. But yes, the good part is declines are being bought. A major trend is positive to range bound until it holds about 1370. It can head towards immediate hurdle of 1470 kind of level. And I think other name is from. So I think first query is
Whirlpool of
Voltas.
India.
Yeah, Whirlpool of India. So Satvika asked
Yes,
about
first query is
Whirlpool.
Voltas, second was Whirlpool.
Yeah. Yeah, so
Yeah.
already I discussed about Voltas for the reply of Satya. And talking about Satvika, Whirlpool has given a consolidation move. if I look at the yearly chart, this stock is down by 27%. And in fact, from last 5-6 years, the stock has got stuck in a range. However, it headed to 2780 kind of level, but fell too old, and now fairly has seen a corrective move in last couple of months or quarters. However, some consolidation is visible, momentum is missing. So if someone is holding, I think you need to hold for a long time. The major momentum will only happen once the stock goes above 1420, 1430 kind of level. So as of now, no major view because the stock hardly find the momentum, gets stuck in a range. So need to follow key levels to get some sort of momentum in the counter.
Okay, that's the view. I hope that answers your query, Satya and Satvika. A couple of more queries then. I can see, a new, viewer sending us a query. Shikha Kapoor has a query on Bajaj Auto for this month. Wants to know your thoughts. Bajaj Auto, I think since the 14th of August or 15th of August, it has seen a rally of somewhere around 10 to 11% or thereabouts. But off late, it has been fairly flattish in the last 5 days. Of course, we've seen some bit of profit taking emerging as well on auto names. So Bajaj Auto last 5 days has been down 1% or so. But for the rest of the month, how should one really look at it? Should one book partial profits, buy more on dips? What would you advise?
Sikaji, this counter has really did well in the year of 2024 when the price was 12,774. But of late in last 6 to 8 months or in last 11 months, the stock has seen a corrective move. However, it managed to recover well in last 2 months and now holding about 9,000 marks. But yes, it got stuck in a range. Earlier, it used to do a major run-up, but now some sort of range-bound bias is clearly visible in the counter. But yes, if someone is looking for long-term point of view, these are the good companies for the old economy point of view, for the consistent growth and momentum. So I believe 8,800 is major support till it holds. Bajaj Auto can again head towards 95, 9,600 level. But some sort of positive to range bound or buy on decline stance is suggested in this counter.
Okay, that's about Bajaj Auto. There's a query on Divi's Lab from Debu K. We've discussed the pharma basket, but particularly for Divi's Lab, can't see a proper trend in the last month or so. It has been fairly flattish and not doing much over the last 5 days as well. In fact, in the last 1 month, it has seen some bit of correction. I see 3% down since the 25th of August till now, almost 3% downtick here. Are you being able to spot any kind of trend? And would you advise trading in this counter?
So in last 2.5 months, the stock has seen a corrective move from 7,070 to 5,850 kind of level. And from last almost 6 to 7 weeks, the stock got stuck in a range. So I don't see any major momentum here. As of now, we have to play the range between 58.50 to 62.50 kind of level. So likely to be in a broader range until unless we don't get any trigger. It would be tough to comment when the stock will start the next leg of rally.
Okay, that's about Divi's Lab. Hope that answers your query. Couple of more queries, but I think we've already covered. I think I can see one from Naveen on BEL. Naveen, you can perhaps go back in the feed and check, Chandan's answer on the defense names. But for now, I think we're done with the queries for the day. Chandan, would like to thank you for taking out time and joining in and addressing so many queries. Look forward to our next interaction as well. Good going for the market though. So, we've interacted at a good time. We are above that 25,400 mark. Hopefully, when we meet next, we would be above that 25,750 mark that you are looking at on the higher side.
Yeah, let's hope for the way things are improving and changing. We just need the FI short covering, and I think there are high probability the way FI's index long short ratio is near 13%, and I think that can give some trigger. And I think now most of the negativity is priced in, and I think that is the big reason. No negative is more positive for Indian market, and now any positive will be trigger. And again, we need to look at the festive season as well. And I believe 22nd September is the ease out day for GST 2.0 reforms. So I think that can also play an important role. And yesterday also market rallied well, celebrated the 75th birthday of the PM. So I think sentiment is changing, and sentiment is very important in the market as of now. So I believe till it holds above 25,000, we have bullish stance. If it manages to hold 25,500, I think more bullishness could be there in the market, and that will drive the sector stocks and entire market as well.
Point taken, Chandan. On that optimistic note, bidding goodbye to you, and I'll see you pretty soon. But with that, let's shift focus and see what the markets are doing at the current juncture. We are above that 25,400 mark, firmly so. 90-point uptick on the index, 340 points higher for the Sensex. So yes, good going, 83,000 back on the charts. Bank Nifty up 220 points, 55,700, firmly holding on to that level. So yes, we are past crucial key technical levels on the Nifty Bank Index as well. So it's been gaining for a 12th straight day today. That engine that was not firing thus far has started to pick up pace. In terms of the individual movers, then you have the likes of Infosys, Wipro, HDFC Bank, HCL Tech. These are some of the gainers on the higher side. On the flip side, Hindalco, Bajaj Finance, Apollo Hospital, Tata Steel and Axis Bank are among the top laggards. But before we move any further, a message for our viewers. Introducing Money Control Super Pro, your ultimate investment superpower. Get live calls, trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Money Control app and subscribe to Super Pro today itself. We are all right. We are waiting for a big market guest to be joining us shortly. But before that, of course, the recap is the fact that Fed has cut interest rates by 25 basis points. That was widely being anticipated, and much of it was already baked in. But the good part is that we have clarity on the fact that we can expect 2 more rate cuts for this year, totaling 50 basis points. So all in all, 75 basis points rate cut from the Fed this time around, and of course huge shorts in the system, FII shorts in the system. So we are hoping for a short covering rally to take shape as well. That's what analysts believe that could happen, although they have covered some bit of shorts already. But let's go on and welcome our big market guest that I had promised at the start of the show, Vinit Sambre, Head Equities, DSP Mutual Fund, joining in. Vinit, lovely chatting with you, and on a day when we have clocked in that 25,400 mark. Sentiment seems to be turning in every way. Domestically, we all know some reforms have happened in terms of GST rate rejig. We've seen an S&P upgrade. We've had tax cuts in the budget. So all these domestic engines firing. Growth has been pretty good for the first quarter. And recently, sentiment has also taken a turn because of the possible thaw in relations with US. Good commentary and good camaraderie between Trump and Modi. How much of an upside do you see? Because September so far has been a good month for us. We've started outperforming emerging markets this month. That's something that, of course, one will take heart from. But how much more upside do you see? We're just about 800, 900 points away from all-time highs. If some more clarity emerges on US-India trade deal, do you see that possibility of retesting record levels anytime soon?
Yeah, hi, good morning, and thanks for having me on the show. So I believe that I think a lot of the bad news which we have gone through, maybe in terms of the slowing growth, in terms of the liquidity crunch which we faced out here, and also in terms of some slowness which we had seen in terms of the overall capex momentum. And like you mentioned, the US tariff issues. I think on all of those. The at least in terms of the sentiments, the changes are happening on the positive side. Like called out, I think the big reforms in terms of the GST rationalization, I think this could be a very reasonable trigger for the growth to sort of come back. And in terms of the overall performance, India has underperformed the large part of the global emerging markets in the last 1 year. And have seen time consolidation, which means that as we see the growth maybe recovering back, the market should take a cue, and that should mean that we should see some positive directions for the market going forward. Having said that, let me also mention that we still have the September quarter, which could still continue to show the slow trends, which is continuing from the last 1 year. June quarter was also not great quarter from the earnings growth perspective, and I don't think September quarter would change a lot from what we saw in the previous quarter. But as I said, I think all of these reforms, have given those factors which should eventually, help the growth come back.
All right. But when do you expect earnings to come back? Of course, we know that, as you mentioned, second quarter will not be, anything great because, of course, there'll be a delay in festive buying as well because of all these GST changes. But would it be safe to assume that fourth quarter is when we see earnings starting to pick up? And, I was having a chat with Julius Baer's Mark Matthews. He was saying that double-digit EBITDA growth can't be ruled out for FY27. Would you concur with that?
So I think just by the law of the base rates, I think the FY27 numbers definitely should see mid-teens kind of growth numbers. That is what even we are building in. And that's really coming out from the low base which has got created since last year. My expectation of growth turnaround is really starting from the December quarter, because all the benefits what should accrue due to the changes which we have seen, and the festival season also adding to that momentum. I think some amount of that visibility should come by the December quarter is the bare minimum expectation. And I think from there onwards, once the momentum picks up, I believe that would also drive the growth for FY27. As of now, I think we are also building in about 13 to 14% kind of earnings growth for FY27 as well.
All right, mid-teens kind of growth for FY27. Let's talk about the mid-cap end of the market as well. In this leg of the up move that we've seen in the market, month to date, Nifty may have been up somewhere around 3.5%, including today's move. Mid-caps have outperformed, right? Up over 5% month to date. How comfortable are you with valuations at these levels when it comes to the mid-cap universe?
So clearly, when we think about the next 1 year earnings estimates, I think the mid-caps are pricing in a lot of the reasonable growth expectations today, and they're capturing that well. So the valuations are really on the higher side and a bit punchy. But the way to think about mid caps and small caps, I think these are investments made for long term. And the core thesis here is that the mid-sized companies, small-sized companies, they have a potential to grow at a higher clip as compared to the large cap. And the benefit of that accrues through time. There will be periods where the mid caps and small caps would have significantly outperformed the large caps, and then there are it needs time to consolidate and have rebalance in itself. And beyond that, in the long term, I believe the mid caps and small cap story remains strong as far as India is concerned. And from that perspective, I think investors should slightly take that when one is investing into the mid cap as a category.
Sure. Within the mid-cap universe, Vinit, where are you finding the most compelling opportunities? Names that have healthy ROEs and the potential to deliver strong, possibly multi-bagger kind of returns, with a long-term perspective.
So I think we've already seen a lot of the returns getting front-ended in the last 2-3 years. So clearly, from that perspective, it's difficult to really call out at how. What kind of very high conviction multi-baggers are available. But let me say that few of the trends which we are trying to capture through our mid caps are maybe businesses which have seen low cycles and businesses likely to turn around. And within that, two large segments wherein we'll have to definitely dig into companies being more specific. But two large segments. One is the overall lending space, where the benefits of the interest rate should start again accruing from maybe the third quarter onwards, because till then I think the banks and NBFCs are going to face the challenges of NIM pressures and credit asset quality challenges. But beyond that, I believe that that's going to be one category which will benefit due to the growth comeback, and also the expansion in the profitability and reduction in the asset quality is what I'm looking at that space at. Beyond that, I think consumer definitely comes out as a space which has been lackluster in pockets last 2-3 years because of the COVID-related stress is what we saw. So I think the benefits doled out should drive the benefit out there. The third category which I am sort of looking at is the big changes which are happening when we look at the companies are the new areas and new avenues of growth, be it semiconductor, be it the electric vehicle, be it the energy transition. I think a lot of the money is going to come here, and a lot of the profit pools are also going to get accrued here. But we have to be very careful with what kind of companies we'll see those profit pool accruing in a big way. And I mean, we are still exploring, and we believe this can become a large space, like called out multi-baggers. A lot of stocks have already reflected those, but still the opportunity is large. So maybe looking into these areas to provide some outcomes is what I feel.
Of course, consumption is one pocket that you mentioned. How are you looking at these new age consumer tech names? We've seen very strong rally coming through in shares like Swiggy, Zomato. Yesterday we had a very good debut from Urban Company as well. High growth names. A lot of promise there, and a lot of they cater to home services, and that has been gaining traction. We've seen how the likes of Zomato have performed, or Eternal for that matter. How are you? What are your thoughts on this particular space? Do you think these warrant a look at these valuations?
I mean, definitely we keep looking at these names, and we have explored them in the past, but unfortunately we have not been able to participate because the one end of the spectrum is that very high growth and a very strong use case which these guys are actually catering to. The other end of the spectrum is the risk. Maybe we are trying to just understand those factors slightly in a more nuanced manner, because we all know these are technology-oriented businesses, and what kind of disruptions can come and hit them is also very important to analyze. So maybe we are putting some more stress on what kind of risk can come up, and once we believe the risk reward makes a lot of sense, then we will definitely look at some of these names. Maybe few of the new tech businesses we are capturing directly, indirectly, not through the names which you mentioned, but through other names. But I think there's a merit in looking at those, because I think we recognize that India, the new generation is shifting the way things are, the goods and services are getting consumed. So we need to align to that, and from that perspective, I think our hypothesis is pretty open to look at these kind of businesses.
Got your point. And in terms of traditional consumption, would you look at discretionary? Would you be tilted towards discretionary or staples? Because staples, you have this inelasticity of demand, right? I mean, you can only brush as many times, even if the prices of toothpaste go down, right? So how are you placed? Do you see more room in staples, or would you say that, for long-term growth, discretionary is one area one should play the traditional consumption theme via?
I think one clarity we have, and we've seen also in the past, is that the discretionary generally is going to outperform the staples over medium to long term. And I think this is a very clear demographic trend, which is pretty well established, that as, like you mentioned, as your basic needs are covered, then the large part of the money gets spent into your discretionary space. So I think from that perspective, we are definitely looking at the discretionary space slightly more pronounced manner as compared to the non-discretionary. And from the same perspective that, the income levels are growing, consumers are becoming aspirational, and but new trends are also happening. We are also seeing that a wallet shift taking place earlier, versus, let's say, maybe painting a house, people are wanting to travel more. So I think we'll have to keep watching how the trends are also shifting, and what is more sustainable medium-term trend to see allocating our capital there. But I think broadly, from a top-down perspective, discretion is the way we want to go with.
Got your point. On the capex side, I want to talk about the defense and railway, shares. They've seen renewed buying interest. There's been a lot of order wins as well. But, market seems to be focusing in on these order wins rather than the execution concerns that were there earlier. Uh, is it justified? Are the valuations still justified for these railway defense names? This renewed interest, do you think that warrants, a look at this juncture?
So I think the stocks are capturing in some of the again the second round of the order wins which have got placed, and maybe some amount of excitement has really caught up because of the India-Pakistan war, and global geopolitical situation is also not great. So from that perspective, I think the sentiments has improved, but we need to be conscious about the valuations, because many times we find that when it comes to execution, there are definitely times where companies fall short of what is expected, and hence those maybe could be the points where one could really look at these companies, because I believe that the long-term sustainability of this trend seems more stable. More importantly, I think Indian companies have started targeting the international market, which is, I think, a good thing, though small today, but I think that could grow if once we establish our credentials. So I think these aspects make these businesses more stable and more sustainable in nature. But like I said, conscious of valuations at right point, maybe we would want to look at these. And the same actually works for railways as well. They've gone through the high cycle now. I think the order book cycle was a bit slow, and which is where the stocks has seen correction. But we are not watching that space at the moment because we believe relatively the power sector is seeing much more investments taking place.
A couple of more questions, Vinit. How are you placed on IT? A lot of contra calls emerging because of the valuation comfort that some of these large cap IT names offer. Would you also be in that camp? Because, a lot has started moving in favor of IT, right? Because, we've had the Fed rate cut coming through, some bit of, thaw or, positivity emerging on the US-India trade deal front as well. And of course, there's a valuation comfort. Would you say the same for mid-cap IT as well? And how would you position yourself in the IT space right now?
So IT, clearly I'm getting slightly more positive on the segment because of the fact that I think there has been a 1-2 years of slow growth for the sector, and for the right reasons. And more importantly, the kind of impact what AI is actually doing to the business. At one end of the spectrum, I think it creates a deflationary impact, which is where some of the risks have been spoken about for the IT sector. But at the other end of the spectrum, I think the kind of work which will eventually come out, the volume of work, should also sort of compensate or offset some of the challenges which are being spoken about. The other thing is that there is a huge amount of latent demand which is lying low because of the uncertainty due to the US tariffs. Even the global companies which are the customers for the IT sector in India, they have frozen a lot of their plans and investments. I think once that clarity emerges, a lot of that demand, latent demand should also come up and should drive growth. So I think the good part is that we are at the low end of the spectrum as far as the earnings or as far as the growth for the IT sector is concerned. Valuations are, I would say, reasonable for the large cap category, mid cap not as much. But the business momentum should also could surprise maybe once we have more clarity. So I think from that perspective, it makes sense. Plus, the foreign positioning is pretty light out here. Any let's say indication of a positive turn can also mean flows could come back into the sector.
Last question, really. We've seen Fed cutting rates by 25 basis points, hinting at 2 more rate cuts this year. Although the RBI has front-loaded most of its rate cuts, do you think there'll be pressure on RBI to cut rates and by another 25 basis points? Do you see that happening, or do you think that we are done when it comes to our markets, when it comes to India, we are done with the easing cycle for now.
See, I mean, I believe that maybe one more rate cut could happen because the good part is that the growth is slow at the moment. The inflation number is also actually supportive of one more rate cut. But it also depends upon how the RBI would basically want to control or manage the currency as well, because the differential between the US and the Indian interest rate has actually already come off significantly. And there is anyway some bit of pressure which we have seen coming up on the rupee because of the US tariff and all that. So I think it's a bit of a complex situation. Purely from the domestic macro viewpoint, another maybe 25 basis point is still likely. Beyond that, I would say it looks a bit difficult right now. So I think that's my thought.
Okay, so another 25 basis points may be on the table. At least there is case for that. But with that, Vinit, would like to thank you for taking our time and joining in. A pleasure chatting with you, and I look forward to our next interaction as well.
Thank you so much.
Thanks a lot. Well, that was Vinit Sambre with his take on the markets and the sectors to bet on at the current juncture. In terms of the market, we are holding on to the 25,400 mark, turning out to be a steady session for the bulls. 25,400 has been cleared quite decisively, but let's see whether we have the mojo to in fact clear that 25,500 mark as well. That will be an important technical level to breach on the higher side. The mid cap index is also holding on at the current juncture, although the benchmarks are taking the lead in today's session. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Keep your queries coming. We will try and get as many addressed as possible, and of course we'll see you again at 3:30 p.m. with closing bell. Don't forget to tune in for that. But for now, from me and the entire team, thank you. Stay tuned to moneycontrol.com for more news and updates. And before I go, a message for our viewers: introducing Money Control Super Pro, your ultimate investment superpower. Get live calls, trading and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Money Control app today and subscribe to Super Pro. Thank you.